Alrighty, folks, we know that the Fed has initiated a rate cutting cycle. We suspect there could be an additional 75 basis point cut this year. We anticipate anywhere between 200 and 300 points in rate cuts between now and the end of summer 2025. One of the things that I have been hearing over and over and over again is that investors are going to wait for mortgage rates to fall 8% or more. And folks, I have bad news for you. While I do think mortgage rates will be slightly lower next year, I do not anticipate mortgage rates going below 5%. I personally don't even think they will go below 5.5. So what I'm telling people to do today is underwrite deals that make sense today with today's rates. Again, this is a numbers game. You must evaluate deals. You must write offers. You must look for great deals. And sitting on the sidelines because you think that rates are going to go down 100 to 150 basis points is misguided. Let's talk to Stephen Dow from Velocity Mortgage. But first, let's do that little marketing thing so we don't get in trouble. Mr. Dow.
Thanks for remembering. Again, although I've worked very happily for Velocity Mortgage Capital, all the ideas and topics discussed on this channel, that of my own. So let's get it going.
So what do you think? I don't know if you've heard it. I have heard it a lot here in the last 7 days or so. People are just waiting for mortgage rates to collapse before they do anything. Are you hearing investors talk about that or not?
I mean, some, but for I think my normal demographic, it's not as important. They're not really playing that waiting game. They're looking at what, a lot of times because they need that money now or they need the action now. So they can't just like put this, hot deal on the back burner and wait until rates fall. And then that's when they can jump up. The seller's not going to wait. So they usually kind of work in with what they can, what's available and then just try to figure out the terms. It's going to take more work. Like the hat says, do the work. But those deals are out there. But to stand on the sidelines and wait, for the rates to drop down, that's kind of a lazy way to go about it. Like, who couldn't make money in that environment? You know what I mean? So, but the ones that really get those really good deals are the ones that are really putting in the work. And we're actually seeing some of that. I'm getting a lot more calls on up to the 90% CLTV. So people are, I think, gravitating towards that concept and are really trying to utilize that in this current market. And again, I'm just waiting on a couple of responses, but I've already put out the information. And so I think they're just out there kind of trying to structure the deals. But I would agree with you, Mike. Don't be standing on the sidelines because it's just
the worst thing you could do in a real estate market, in my opinion, is do nothing.
Right.
If you do nothing, if you just wait on the sidelines, the market's going to change on you and you're not going to see it coming. It could change for the better. It could change for the worse. The beauty of doing the work, the beauty of daily discipline and focus is we're only underwriting deals at today's rates. We never bet on appreciation. We never bet on lower rates. If you underwrite it with today's cost of capital and it works and you have 30-year money, congrats. If rates get better, great, rate and term. If they don't, great, you're set. If you get appreciation, great. If you don't, great. We have to just continually do the work. I have heard more people since the Fed cut, so it's about a week ago, that are waiting for rates to fall than I've ever heard in the last 5 years. And folks, here's the bad news. Rates are up since Fed rate cut. So don't be that person. Don't play.
Well, because the assumption that rates automatically drop when the Fed rate drops is not, not right. It's not accurate. So it's usually the case, but not always. Like we can see, right? What's going on now. So to kind of wait for that to happen, and then it doesn't happen, it goes opposite. Now you might have missed out on an opportunity where you could have taken that property down based upon current, rate environment information and kind of move forward. But if you're betting on better times to maybe get even a slightly better deal, then you're maybe not ready, because maybe that wasn't the right opportunity for you at the right time. But if you're doing the work and you can structure deals based upon this current information now, get it in now. It cash flows now. If it cash flows now, what are you doing? Why would you wait to get cash flow? That doesn't make any sense.
Yeah. So again, folks, at the end of the day, I'm not telling you do a deal today at all. I'm just imploring you to not stop doing the work.
Right.
If you go into a market, if you have a buy box and you've been looking at it every day, then you hear the Fed's going to cut rates, and then you take a month off, you take 2 months off because rates will be better next year. Your buy box has completely changed, and you're going to start over from scratch. Don't do that.
Yeah, I wouldn't do that either, only because I mean, I've seen deals. That's kind of a phrase that one of my coworkers, rest his soul, used to say: "Time kills all deals."
Yeah.
Time
Yeah.
kills all deals, and so yeah, if you're just waiting for that rate to lower, somehow someday, it may in the near future. Just nobody knows. But if you're just letting that opportunity pass by, I think that's where, looking back, you're gonna probably
Yeah.
wish you didn't do that. Yeah. So
Yeah.
anyway, I agree with you.
Yeah. And the other thing we're seeing now is it looks like more and more people are getting interested in the 90% CLTV, 90% combined loan to value. A first with velocity plus a second with the seller, only 10% down, which is amazing. People are looking at 12-unit buildings, 20-unit buildings. And the reason they're doing that is because I think sellers are realizing that the demand is not there. They're starting to entertain taking out a second. Again, getting a 90% leverage loan with a below market blended interest rate is best of both worlds. Again, remind people the power of the 90% CLTV.
Again, ideally we would want to have that loan set up on what we've been calling a 50-40-10, where I provide a 50% LTV mortgage or first mortgage, seller can carry up to a 40% second, and then buyer can come in with 10. But the power here is where, if you can structure the terms with the seller second, in a certain manner to where the blended rate from the seller, the combined rates from the seller financing as well as mine blended together are typically even lower than current market rates at a lower leverage. So I think people just have to understand the payment structure and then be able to calculate that to see the cash flow. Whereas that some people are like rate. Well, yeah, but if you structure the financing in such a way where the seller carries more of the weight at a lower rate, then the payment, the blended rate is much lower than even first mortgages going on right now at like only 75-80% LTV. So it's very powerful. And again, I think people are slowly. It's taking a lot more time. It's gotten a lot of moving parts to it, but I think people are really starting to grasp it more. So I'm getting a lot of interest. I think you and I were talking about it off camera before we started. That people are, several people already called me about that. So in any case, I know we might be repeating it a lot of times, but we're the only lender that allows this. So and not everybody knows about it.
Best tool.
Yeah.
And I think the 90% CLTV is going to be the best tool when we look back 12 months from now. There'll be more deals done with that, specifically on apartment buildings in bigger deals, because sellers want the better price. They're more advanced. They'll take a second. And, I think a lot of people are going to get below market interest rates because they take the first and the second for the debt, and everybody wins. If somebody wanted to reach out to you and start that conversation, how do they do it?
Email is always going to be the best. SDAO@velocity, the word mortgage spelled out, .com. In the subject line, please put the acronym ORAAT to make it past the firewall. The body of the email, maybe a brief description, what you're looking for. Address would be great. At least city and state to make sure I lend there. Your FICO score will really be helpful as well. And then, of course, best phone number to reach at, and typically 24, 40 hours, I'll be back in touch.
Steven, you're amazing, man. Thank you, buddy. Take care.
Takes one to know one. Thanks, brother.